All right. Let's see. All right, good morning everybody. Today is December 18th, 2024, and thank you guys so much for joining. Let's take a look at the economic calendar before we really start, the analysis today. So coming into this morning, we don't really have any red folder news today, at least this morning. But at 2 p.m. Eastern Time and at 2:30 Eastern Time, we do have FOMC statement and the FOMC press conference. So today, I am anticipating, a lot of volatility coming into this week. But as of right now, or not, because we have FOMC today, I am anticipating a lot of volatility, and FOMC tends to be a fake out move first initially, and then the actual direction of the markets will show its hand after the first move. But because there's FOMC today, I am anticipating a larger range, at least on the daily candle. But my daily objective coming into today was for us to take out previous day low. So I wanted to see Tuesday's low get taken, and we took out previous day low as soon as we opened up at 6 p.m., right? So here at 6 p.m. we opened up, instantly took out previous day low, and there is this dealing range here on the higher time frames. 4-hour dealing range. From this 4-hour swing low to this 4-hour swing high, we have a dealing range, right? And notice how prices trades into the discount of this dealing range, and then starts expand up higher. And notice this expansion higher here, or this move up higher, we also traded into premium of this dealing range from this swing high to this swing low. And I actually believe we traded into OTE. Yep, we traded right into dead center of OTE, and then now we are starting to sell off again. Coming into this morning, I am anticipating for the 6 p.m. low to be taken here, so I want to see this low get taken. Notice how on ES we have yet to take that low as well. So that means there's no SMT divergence as of yet between those two lows. So I want to see prices take out that low and possibly retrace back into equilibrium again, or retrace back into discount, at least for the morning objective. I am not anticipating too much, we could move a lot this morning, but I feel like because we have FOMC during at 2 p.m. today, prices are gonna want to wait for that news driver and then really pick up the pace. But as of right now, for this morning at least, I would base my morning objective on how we close here on the 8-hour time frame and the 4-hour time frame. Based on those two time frames here, we're gonna close on those two candles at 10 a.m. Eastern time, meaning that we would now have a 8-hour/4-hour objective, right? So based on the 4-hour and the 8-hour candle right now, if we were to close right now on those two time frames, what can we anticipate, right? Can we anticipate for the 4-hour low to be taken slash 8-hour low to be taken, or can we anticipate the 4-hour slash 8-hour high to be taken? So the red line is the 4-hour slash 8-hour low, and I'm gonna make the green line the 8-hour slash 4-hour high. So can you anticipate for prices to take out the red line or the green line? Or a more simple question is, are we closer to, is the close of the candle closer to the red line or the green line? And keep in mind that the blue line, I'm gonna make the close of the 4-hour slash 8-hour candle the blue line. So is the blue line closer to the red line or the green line? Simply just looking at it, the blue line is closer to the red line, right? That means I can anticipate for the morning session at least to take, is the bare minimum for us to take out here on this morning session is the red hour low, or that red line, right, which is basically the 4-hour slash 8-hour low. That means I can have a bearish bias coming into the morning session, because like I said, I can't really rely on the daily time frame anymore, because the daily time frame, we have already completed our objective, right? Based on how we created this daily fair value gap here, what can we anticipate for prices to do? Can we anticipate for the daily fair value gap to be treated as a breakaway gap, meaning prices are going to rebalance it or aren't going to rebalance it? Or are we going to treat the daily fair value gap as a gap that could be rebalanced, right? Meaning prices are going to trade into that fair value gap and possibly trade up higher, or possibly respect it or disrespect it. With the way we close here on this daily candle, with the way we close here on Tuesday, I can anticipate for the daily fair value gap to be rebalanced, because we didn't close. So backtracking a little bit here, a fair value gap is created with a 3-candle pattern, right? This is the first candle, this is the second candle, and this is the third candle. So fair value gaps are essentially a 3-candle pattern, right? And what it is depending on if it's a buy side BISI or a SIBI. So in this case, this fair value gap would be considered a BISI. First candle, notice how the first candle's high and the third candle's low do not intersect with each other. They don't cross, right? That means there's a little, that means that middle candle, that second candle, is really strong, right? And it created some sort of inefficiency because of how strong the markets are. So depending on how we close here on the third candle will tell me if we're going to rebalance this fair value gap. And how I can determine that is, did the third candle close above the second candle? And the second candle is that purple line, right? Did the third candle close above the second candle's high? And the high here, I'm gonna note this as a orange. So did the third candle close above the orange line? We didn't even touch it. So that means I could treat this fair value gap as a gap that gets rebalanced, right? And this is how I determine if fair value gaps are going to be left open or closed. Basically rebalanced or not rebalanced. And with that in mind, because of how we created this fair value gap, my bias coming into the daily time frame was for us to rebalance the inefficiency. And we ended up rebalancing that inefficiency at 6 p.m. like I said. So now coming into this morning, because we have already completed the daily objective, I can't rely on the daily time frame for my bias anymore for the morning session, right? What I'm going to rely on is lower time frames relative to the daily, right? So after the daily time frame gets accomplished, the objective gets completed, I would then go on to maybe the 12-hour time frame, 10-hour time frame, 8-hour time frame. and that's where it leads us now. So now I'm going to, like I said before, I'm going to use the 8-hour candle and this 4-hour candle as my morning objective. And what can we anticipate here? We haven't closed yet, so we have about 18 minutes left till the 4-hour candle and the 8-hour candle closes. But based on how we are looking right now, I can anticipate for us to take out this 4-hour low and this 8-hour low. And one thing I do want to note, we do have a SMC divergence between ES and NQ. So ES has, so there's this larger SMC actually. There's this pretty large SMC divergence between ES and NQ here at these lows, but there is an SMT divergence between this low, December 17th, at 18 o'clock, and December 18th, 2024 at 6 a.m. So there's no SMT between those two lows yet. So I can anticipate for that low to be taken here coming into the morning if we have a bearish closure on the 4-hour and the 8-hour time frame. But as of right now, there is a larger SMT divergence here. So here on NQ, we failed to take out this swing low, whereas ES has already taken it, which is, you know, kind of significant. But yeah, that just means that NQ right now is just more bullish, and it's respectable because, like I said, noted here in my weekly market outlook, I pointed out how, like I said before, let's apply the fair value gap theory again. This is the first candle, second candle, third candle. And let me make this 3 different colors for you guys so it's a little bit clearer. But essentially, is the purple candle's closure above the green candle's high? And this is the green candle's high. So basically the second candle's high. Did we close above that red line on the third candle? And this is the third candle's closure, by the way. So the black line is the third candle's closure. The red line is the second candle's high. And is the black line above the red line? Yes, it is. That's breaking it down step by step right there. And because we closed above the red line here on the third candle, I'm going to treat that fair value gap that we created on the weekly time frame as a breakaway gap, meaning my objective for the weekly time frame is going to be previous week's high or or we could consolidate, but I'm not really anticipating a consolidation coming into this week with all of the news that we have. FOMC tends to not cause consolidation. It tends to cause a lot of movement, a lot of range. So yeah, my anticipation was for us to take out previous week's high, and this is also noted. Oh yeah, bye man. And I also did note this on my weekly market outlook here. So NQ, based on the weekly power of 3, I can anticipate for prices to take out previous week's high on NQ, right? And we completed the weekly objective. After we complete the weekly objective, what do? Go on to the lower time frames relative to the weekly, right? So whenever I say relative, I mean I'm going to go on the weekly. I'm going to go from the weekly time frame, and I'm going to go on to maybe the daily time frame. I am not going to go from weekly time frame to 1 minute for my buys. Bye, man. and like you guys can kind of see where I'm trying to get at. That's kind of an over exaggeration, but this helps with like not being too zoomed in, right? There's a lot of people that trade only on the 1 minute chart, but because you're trading only on the 1 minute chart, you literally, it's like you're trading with a set of sleeping mask. Is that what? Eye mask. It's like you're sleeping with a sleeping eye mask, or trading with a sleeping eye mask. So you're basically essentially trading blindly. You're so focused on one time frame that you're not pulling information from other time frames, right? So I want to go from, because we completed the weekly objective, I'm gonna go now from the weekly time frame to the daily time frame. What is the daily time frame going to contain? So I'm gonna wait for the daily candles to form, right? So let's just say we close here on Monday. So because we close here on Monday like this, right? What can we anticipate, right? I'm anticipating for previous day. So I would anticipate for previous day high to be taken here. Coming into Tuesday's price action, right? It's either we could take out previous day high if we respect this 4-hour fair value gap, or we could have some sort of immediate rebalance. So I'm gonna also watch out for, so this comes with experience, but notice how we expanded so much, right, during Monday's price action. Because of this large range candle, I'm already like, a thought has already came into my mind that, okay, hey, watch out for the Friday's high, right? Because depending on how we close here on Tuesday's price action will tell me if we're going to create a fair value gap. Because like I said, that second candle of a fair value gap tends to be a really large candle, like a large range candle. And Monday here we had a large range. So immediately in my mind I'm thinking, okay, because we had such a large range on Monday, and of how we could possibly trade on Tuesday, if we end up consolidating, we could create a daily fair value gap that gets rebalanced. But if we expand higher on Tuesday, if we continue to expand higher, then we're going to create a fair value gap that doesn't get rebalanced. That's literally everything that's processing through my mind already, right? And we ended up, trading into this 4-hour fair value gap and not really respecting it. So now, like I said before, we created that daily fair value gap. It gets rebalanced, not complete. I'm not really sure if we're going to, respect it. If we're going to disrespect it, all I have to wait for is time, right? I'm gonna wait for Wednesday's price action. I'm gonna wait for how we close here today, to see how we finish off on the rest of the week. But I haven't really talked too much about this on stream, but there's also standard deviation projections, right? We can use standard deviation because if you guys take a look at on the daily time frame, we have been continuing to make new all-time highs, right? So because we're continuing to make new all-time highs, we don't necessarily have a target, right? Like there's nothing that we can target here on the left of us. So because we have nothing to target, it's best that you set up some standard deviation projections with all the retracements, right? So here, because we're retracing back inside a daily fair value gap, and we ended up respecting that daily fair value gap, and we expanded higher, right? I'm gonna take that last swing leg into the daily fair value gap. So we traded up higher here, traded into a 4-hour fair value gap. We never completely disrespected, right? So notice how these candles closed. We didn't close above that gray box. So bodies tell the story, or the bodies tell the narrative. The wicks do the damage. So the wicks here of these candles are just wicking outside of the blue box, but we never get a actual closure above that gray box. And so we traded up into that 4 hour fair value gap, traded back inside this daily fair value gap, and we should respect this daily fair value gap if we're going to maintain bullish price action, right? Trade into the daily fair value gap and expanded higher. So from this last swing leg here, you can take the standard deviations, and I tend to kind of play around with my standard deviations. Like, you're probably asking, why am I not taking this swing high? Why am I using this green line or this high right here? Well, because notice how from this point to this point, the negative 0.5 standard deviation lines up with existing buy side liquidity. Because it aligns with existing buy side liquidity, it gives me more confluence that, hey, we are most likely going to take out this negative 0.5 standard deviation, and the standard deviation that you're going to set up here, that you're going to project with from this swing high to this swing low, is probably it's more likely that these standard deviations will get hit. And this is exactly what it does here. It aligns with my standard deviation, or the existing buy side liquidity levels, or aligning with my standard deviation projections. And so we tend to have I don't use standard deviations like always, but what is told by SET is that we tend to have retracements here after hitting the -2 to -2.5 standard deviation. So once we're inside this little range right here, so I'm gonna make this box yellow, not orange. Once we're inside this orange box, we tend to get retracements, right? And I mean, it makes sense that we're going to retrace here because we're inside that standard deviation. So this is actually like completely normal here. But yeah, we have about 7 minutes left or so. And how we close here on this 4 hour candle and the 8 hour candle. So let's take a look here. Let's dive into this hourly candle. Let's dissect this here, right? So what are we creating here? A hourly fair value gap. Should we respect this? I'm sorry, not respect, but should we rebalance this fair value gap, or should we treat this fair value gap as a breakaway gap? So like I said before, a fair value gap is a 3 candle pattern. So let's break it down. This is the first candle. The first candle is the black line. I'm going to do the second candle with a orange line. Or actually, let's make this tealish color. And I'll make this a pink line. So is the pink candle's closure below the green / bluish candle's low? So is the third candle's closure above or below the second candle's low? And in this case, if we were to close here on this hourly candle right now, we would be closing above the second candle's low, which now tells me that it is higher probability that we're most likely going to rebalance this hourly fair value gap. And what is that 4 hour candle telling me now? See, here with how we close here on this 4 hour candle, it's not a strong bearish closure. Same here on the 8 hour time frame as well. So if we had a a stronger closure here on the 4 hour time frame, I would have said that we are going to be bullish, but by the looks of how we're going to close here on this 8 hour and the 4 hour candle, and how we are trading here on the 1 hour candle, prices is telling me that we are most likely just going to wait and consolidate here. There's not a really clear direction, because I'm not seeing higher prices here, right? I actually am not seeing higher prices. Am I seeing lower prices? We could see lower prices if we respect this hourly fair value gap. But what's something that I know that, like, concrete, right? What I have high conviction on and high confidence on is for us to rebalance this hourly fair value gap. So now, because I can't really rely on the 4-hour time frame and the 8-hour time frame, I'm now going to go onto the lower time frames relative to the 8-hour/4-hour. So that means I'm going to go from the 4-hour bias to now possibly the 1-hour bias. What's the 1-hour bias telling me now? The hourly candle, or the hourly story here, is for us to rebalance this hourly fair value gap. So that's my higher time frame objective, right? How can I get a model that will allow me to target a retracement back inside the hourly fair value gap? I could take my entry pattern here on the 30-minute time frame or the 15-minute time frame, and depending on if there's displacement here, will tell me if we're going to get an actual if we're actually going to retrace back into there or not. But yeah, this is how I kind of see prices here, right? And yeah, if we can get a strong closure here on the 15-minute time frame, I could and would consider a move higher into to target a rebalance of the hourly time frame or the hourly fair value gap. Like I said before, the hourly higher time frame objective here on the hourly time frame is for us to rebalance the hourly fair value gap. So I'm going to wait and see how we close here on this 15-minute time frame, and then I would really decide if I'm going to take this or not. But before that, I actually need to get my things set up. So give me 1 second. You guys can't see anything yet. All I'm doing here is I'm just signing into my account. Oh, whoops, not yet. Officially. Alright, so here we're about to close here in about in 20 seconds or so. And like I said, how we're closing here on this 15-minute time frame is really suggesting to me that we're going to take out the 15-minute high. So I'm going to take this model here for a 1-for-1 to target a rebalance of the okay, I'll take this if I get this entry here. So I'm targeting the 15-minute high, right? Let's see if I can get an entry. Okay, I didn't. Okay, so I couldn't get an entry pattern. I didn't have it set up. Ah, that sucks, but it's okay. So I would have gotten an entry right there to target the 15-minute high and a rebalance of the hourly fair value gap, right? But the way I would have taken this model here is pretty simple, but I would have taken some off, or not taken some off here actually. I would have moved my stops to break even after we complete the 15-minute objective, and then my targets here would have been at the 1 hour the rebalance of the 1 hour fair value gap. But we took out the 15-minute high, moved my stops to break even. But yeah, that's how I kind of would have handled it. So let's go back to it. So why am I So you're probably wondering why would have I entered right there, right? Well, for me to even enter any trade, right? First, I require a higher time frame objective, right? My higher time frame objective here coming into this morning, at least, was the 1 hour objective, right? So you guys, I mean, with everything that I just talked about, how I said that I can't rely on the 4 hour in the 8 hour form, in the 8 hour time frame for my bias. I have to go onto the hourly time frame for my bias, right? So I have established my bias. My bias is going to be on the hourly time frame, and my bias is going to be that prices are most likely going to rebalance that hourly fair value gap. So this hourly fair value gap, I want to see get rebalanced. I want to see us trade into that hourly fair value gap. I don't care if we're going to disrespect it, respect it or not. I don't care. All I care about is that we're going to rebalance the hourly fair value gap, right? So with that in mind, because I have established my hourly or my higher time frame objective, right, I would now go onto the lower time frames relative to my hourly model. So a time frame that you could go from hourly on is that you can go from the hourly, and then you could go on to, you know, maybe the 15-minute model or 30-minute model. So the model that I'm structuring I would have structured my trade off here is the 15-minute model. And what is the 15-minute model telling me? That we are most likely going to take out this 15-minute high. So the 15-minute high is that red line, and a rebalance of the 8 hour, or sorry, a rebalance of the 1 hour fair value gap is the green line. So they are in conflict. The 15-minute time frame is trading higher. The 8 hour, I keep saying 8 hour. Okay, let's backtrack. So the 15-minute time frame is telling me that we're going to attack the 15-minute high, or suggests that we're going to take out the 15-minute high. The hourly time frame is suggesting that we're going to rebalance the hourly fair value gap. There's a reason for us to be trading higher on the hourly time frame. So if I were to take this model here, it would have been reasonable, right? It's reasonable for us to be targeting be taking this model. So right at 10, another requirement of my trade, I'm sorry. So higher time frame objective. Second thing is I'm taking my model on the 15-minute time frame now, right? Because I have established those two things, I would now require some sort of displacement. I need to see why should prices be trading higher here. There needs to be, like a strength, like some sort of strength on the lower time frames that suggests that we are going to continue higher. And how I define strength in the markets is there's displacement, and displacement is essentially creations of fair value gaps. And I've gone over this, a decent amount, where imagine displacement is, I've used this analogy before and I'm going to use it again. Imagine displacement as a swimming pool, a kid-sized swimming pool, right? And, I'm going to use pictures here for kid-sized swimming pool. So imagine there's a kid-sized swimming pool, something like this, right, with water in it. And imagine an elephant gets dropped into the kid-sized swimming pool. It could be fast, but an elephant gets dropped inside this kid-sized swimming pool. Imagine what would happen with the water after an elephant gets dropped inside that thing. Is the water going to remain still and calm? Or is the water going to seek, another more space, right? It's gonna search for something like really fast. It's trying to search for more more volume, if that's the correct word, but more like it needs more space to hold the water because there's been a large entity that just gets dropped into it, right? So imagine that analogy, but in the markets. Displacement is the same concept here. That's how I would break it down. And displacement here, right? There's fair value gaps, and that means there's like fair value gaps is literally the same thing. There's an elephant that just got dropped here. I don't know what caused it. I don't care what caused it. I mean, as long as there's displacement. And going back to why I would have taken this model here, the 15-minute time frame, like I said, is suggesting higher prices, right? So now I require some sort of entry pattern. The entry pattern being displacement, being fair value gaps. There's a 1 minute fair value gap here. Never got disrespected. And I'm gonna start this, long position here at essentially where I would have taken my model. Right there. I would have taken my model right at 10. My stop loss could be, this. Could be this. Candles low, because there's actually two fair value gaps that gets encapsulated here, so we could actually end up wicking into this lower fair value gap. But my target here would have been a 1-to-1, so I would have been targeting at least here. But keep in mind that my objective is for us to rebalance that hourly fair value gap. And we took out the 15-minute high. After we take out the 15-minute high here, I would have moved my stops to break even, and then let the trade do its thing from there. But we ended up getting stopped out, or I didn't even end up getting an entry because I didn't have my position set up and my risk management wasn't there. So sometimes that happens to us. But as long as like I said, I had the conviction to, and I was able to break it down to you guys why I would have taken that trade. Hopefully, that helped you guys with viewing price action. But there's that. So what did we just do here on the hourly time frame on NQ? What is this small wick doing? So this, what does this say? Oh shoot, sorry, let's not use that. But what does this say? These candles here are the hourly candles. What did we just do on the hourly time frame? We just traded up into that hourly fair value gap, right? It doesn't matter how small, or it doesn't matter how high we get and how deep we get into this fair value gap, and how shallow we get into that fair value gap or dig into that fair value gap. As long as we can get a wick up into there, this is all I need for it to be considered rebalanced. This fair value gap here on the hourly time frame, to me at least, I would view this as a fair value gap that has completed, it's already been rebalanced. Prices has traded into it. It hasn't filled up the inefficiency all the way, but it has been rebalanced. So there's that. So now, my objective here for the morning, at least on the hourly time frame, has now been completed. So now, because we have completed the hourly model, what am I going to do now? I would go on to the even lower time frames for, I would go on to the even lower time frames for a bias now. So after the hourly time frame, you would go on to the 30-minute time frame or the 15-minute time frame for a bias. But I kind of don't want to get into that because that's a lot. I just went from the 8-hour time frame / 4-hour time frame to the hourly, and if I go into the 30-15, it's gonna be overwhelming. But so like now, I would have to wait for more time, right? What does it mean by like I'm waiting for time? As time passes by, candles are gonna close. What does that mean? If this 6-hour candle closes here in about 2 hours, what does that mean? That provides me another chance for another like higher time frame bias, right? That gives more storytelling, that continues to reveal more pages of the story here. So I'm gonna wait here now for I'm gonna wait to see how we close here on the 6-hour time frame or 6-hour candle for possibly another bias, another objective. But for now, I would just sit on my hands, let prices do its thing. We have already completed this objective here, retracing back into equilibrium. We have already completed the hourly objective by rebalancing the 1-hour fair value gap. And like I said, I don't care if we respect this fair value gap or not. If we end up respecting it and continuing lower, good, or great. It doesn't matter. If we disrespect it, then cool. It doesn't really matter. But yeah, that's gonna wrap it up for the analysis for here. At least I'm gonna go on to some of the pros and cons here with you guys, just so I can really establish a strong foundation. But so the first positive here from previous week, at least, is every single trade that I took or had in mind of taking, what was the higher time frame objective? I always require a higher time frame objective, and you guys saw me do that this morning. A higher time frame objective is a concept. It's not really it's not concrete, because I'm not saying it's a 1-hour higher time frame objective. The higher time frame objective is relative to whatever model you're taking, right? So it could be a 4-hour bias or 4-hour higher time frame objective. It could be a daily higher time frame objective. What I'm trying to say is that prices is fractal. So depending on what type of model that you're trading with, the higher time frames could be different. So like I said before, hourly higher time frame objective, 4-hour higher time frame objective, weekly higher time frame objective. Yeah. Second, being completely fine and patient, and when waiting for the models to provide a opportunity, right? I'm not necessarily forcing anything onto the markets. If the markets provide a setup, I'll take it. If it doesn't, then great. I'll just sit on my hands and wait for more time, for more structure to get created. Third, grasping the fact that the result of the trade isn't extremely important to me. It's whether or not if I'm able to follow my rules. So I find more enjoyment in actually being able to follow my rules and executing on them than just taking a trade simply because, I think prices are going to go here because of no reason. I require reasoning, and I always require there to be facts and information, there has to be a reason for why prices should continue higher, right? I'm not going into a trade blindly. Fourth thing here is paying attention to SMT, or fourth positive is I'm continuing to pay attention to SMT and understanding that at every significant swing high and at every significant swing low, it will always be accompanied by SMT. Some of the negatives here. So whenever there isn't an opportunity or model, I should take it. There are times where I kind of overthink it where like every single box gets checked. Higher time frame gets checked. What type of model are you taking? Is it relative to the higher time frame objective? Gets checked. Is there displacement? Gets checked. That means everything has been met. All I have to do is take it. But sometimes I let my subjective side get it takes over me, and I kind of just really try to dig deep and find I don't know if there's a word for it. There probably is a word, but I try to find a fake reason for me not to take it. Second, negative, continue to practice consistent risk management. And some of the improvements here are consistent models. So if I see a model, I'll take it. Requiring a higher time frame and displacement on every single trade that I take. And aligning time frames correctly. So like I said before, you're not going to go from weekly bias onto 1 minute model. There's no correlation there. You could, however, go from the 15-minute model to a 1 minute fair value gap and have a hourly higher time frame objective. Second, pay attention and close attention to SMT. If there is SMT between the swing highs and swing lows that you're targeting, you might not want to take that trade, right? Take every single opportunity or model that is present. And so this kind of goes back to just taking consistent models, build conviction and confidence, not in your trades, but not only in your trades, but in your rules and strategy. Practice consistent risk management. Here is the higher time frame objectives list. If you guys want to write this down. Prices moves for 4 reasons: expand and take liquidity, generate liquidity, rebalance inefficiencies, and retrace into equilibrium. I actually got this idea, or it's not that he introduced it to me. I would say ICT introduced everything. It just Justin Ryland actually he broke it down to a really simple term, and this is what he introduced it as. But the whole concept, I can't take any credit from ICT. This is all ICT. It's just Justin Ryland was able to word it in a way that's a little bit easier for me, at least, to understand it. But expand, to take liquidity. Second, to generate liquidity. Third, to rebalance inefficiencies. Fourth, to retrace into equilibrium. Those are the 4 higher time frame objectives that I am always looking for in every single trade that I take. The second one, however, you're not necessarily taking a trade to generate liquidity. That just means that you are becoming the liquidity. So I have a model for expanding, I have a model for rebalancing, and I have a model for retracing. I don't have a model for generating liquidity. That's basically, you are becoming the liquidity. But yeah, that's gonna wrap it up for today's session. I need to get a quote here for today so I can post it on my Discord. Let's see. Can you give me a stoic / motivational quote? Begin at once to live, and count each separate day as a separate life. I'm assuming that, okay, certainly, here's the break message. Don't postpone living fully. Often people delay their happiness or purpose for a better time, but life is happening right now. This part of the quote encourages action and mindfulness in the present moment. The Stoics emphasize the importance of recognizing the fleeting nature of time, memento mori, remember you will die, and making the most of the present. Count each separate day as a separate life. Treat each day as a complete experience, as if it were your entire life. This approach encourages gratitude, focus, and the desire to make the day meaningful without being overwhelmed by the past or the future. The idea aligns with the Stoic practice of focus on what is within your control today and not getting lost in regrets or anxieties about what lies beyond. How it motivates you. Okay, so I'm going to, can you do a breakdown with every single okay. Okay, alright, nice. I got ChatGPT to do its thing. Okay, so today's quote, like I said, is to begin, or like ChatGPT says, is to begin at once, to live, and count each separate day as a separate life. That is today's quote. And if you guys are in my Discord, you guys will see these daily quotes get added here. Alright, so yeah, that's gonna wrap it up for today. Thank you guys so much for watching, and until next time, I will see you guys later.